All right, welcome to Coffee with Marcus and Mark, the #1 stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Tuesday, January 31st, the last day of January. And the Dow yesterday snapped a 6-day win streak. And we have big companies like McDonald's, General Motors, Apple, Amazon, Google reporting this week. And also, very interesting stats about the S&P 500 that we're going to share with you today. And then we're going to talk about a few trades that we did today and show you how are we trading the markets. By the way, if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodge, and we are real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here and looking for some honest insights into the fascinating world of trading, you are in the right place. And wow, these markets, Mark, I mean, going up and down and being a little bit nervous about what's happening here.
Yeah, we see that the last couple of days, the markets have been moving higher, but then yesterday, a pretty big sell-off. All things considered, the S&P down 1.3%. So pulling away from some what some would say might be resistance, and like you said, just some nervousness with earnings this week and also the Fed.
Yeah, and we'll talk about this in a moment. But just technically looking at the chart here, I mean, the S&P, we talked about it yesterday, the 4,100 level. And then this is on the one hand. On the other hand, we have the 200-day moving average that seems right now to act as support. So we have been now, 1, 2, 3, 4, 5, 6, 7 trading days above the 200-day moving average. And for the S&P, it's a I don't know, kind of decision time right now. Will it break above 4,100 or stay in this range? And
Yeah.
yeah, it's exactly as you said. I mean, today the Fed meeting starts. And we did have a few reports coming out this morning. We had consumer confidence coming out lower than expected, but the market's barely budged looking at that.
Yeah, at this point, there's bigger fish to fry, and on another week, maybe that's some data and news that traders would react to. But with this week earnings, some big companies reporting, and the Fed just kind of overlooked that in really a minor reaction.
Yeah. So again, 20% of the S&P 500 companies reporting earnings this week, and then the Fed statement tomorrow at 2 p.m. Eastern time. That is the big one that's moving the markets. I mean, looking at what traders are expecting right now, a 99.8% probability that the Fed will raise interest rates by 0.25%, a 0.2% probability that they keep rate the same. I wouldn't take that bet.
Well, you never know. It could be you could have a pretty nice payout if you did. But yeah, it's all but certain at this point. I mean, sometimes the Fed has tricks up their sleeve, but I don't think there's going to be any surprises.
Yeah, and I think the big one is here the probabilities. That is probably something that's going to change tomorrow. How much longer will they raise interest rates? And then for how long will they keep interest rates as high as they are right now? I think this is where tomorrow we'll see the wording. And again, I do believe that Powell will hammer down the market.
We'll see. Right now, Nasdaq on track for its best month since July. The S&P on track for its best January since 2019. Snookered between some key technical levels there. And Marcus, I know you mentioned it. There are some interesting stats for the S&P.
All right, so super interesting. And this is where in the big stock traders almanac that we can dust off and then open it up, we see that if the S&P was up more than 5% in January after a losing year, and this is what could happen because year to date right now we're at 4.96%, so the S&P needs to pull a little bit higher, but then it could be up 5%. And this would be only one of the 5 years when it happened. And whenever that happened, well, the S&P shot up 30% by the end of the year.
Wow.
This is where, as you know, we have our bet. I believe that by the end of the year, the S&P 500 will be at 4,500 or above. You took the other side of the bet. How do you feel
I
about it
did.
now? When I'm throwing these stats at you, come on.
I love this stat. I love this stat, and I'd love to send you some stakes with the S&P above 4,500. But just from a betting perspective, I had to take that bet.
Oh, of course.
Um, I had to. It's like because the market could go sideways, I make money. The market goes down, I make money. The market crashes, full blown recession, I make money. Well, technically, I get stakes. And if the market moves higher, but just not enough, I get stakes. Just like the options trading that we like to do, the probabilities are in my favor, even though I'd be happy to let you win and send you some stakes at the end of the year.
Yeah, just for the record, we also did this bet when the S&P, we did it in the beginning of the year when we were still hovering around 3,800. So now it's a
Yeah,
bit easier to make this bet, and we'll see. I mean, huge, big week. So we had, for example, McDonald's reporting earnings, and McDonald's here down right now 2.7%, which is kind of a big move for McDonald's.
it is. I mean, McDonald's, they reported better than expected earnings and revenue with increased visits, but to the restaurants. But they said short-term inflationary pressures continue in 2023.
Yeah. Then we also had Pfizer reporting earnings, and that is actually a very interesting one because right now, when we are looking for real opportunities, I think we talked about this. Let me just hop over here to the PowerX Optimizer and look for real opportunities. That right now, during earnings season, there are some fantastic opportunities, and it's also a little bit slower because we do not like to sell puts right into earnings. But what we have done quite a few times is when a solid company is reporting earnings and gaps lower, that we take a trade here. And this is what we are looking at this morning.
Exactly. And it's the reaction and some volatility there that could help inflate the option prices. But rather than just kind of being a gamble going into earnings where it could go up, it could go down, we're seeing how the stock's reacting. We're looking at key support levels. We're seeing where we could sell puts to potentially own those shares at a discount. I think it puts the odds in the favor and gives us a better way to trade earnings rather than just like what most retail traders do. They just bet money, hope earnings go their way, and many times they lose.
Yeah, so we went through our screening process, and this morning PFE showed up on our scanner. And looking at the fundamentals, we did have uh, some very nice years here with PFE, as we can see. 2021, great year for them, but even before 2017, 18, 19, all profitable years. The revenue around the same here than 2021 being a good year. So this is a solid company. Also seeing here, we have a market cap of $245 billion, a dividend yield of 3.75, and a P ratio of 8.4. So it's ticking all of our boxes as a stock that we're looking for. When we saw that this morning, we had a gap down. And again, Pfizer, this is a company that is like McDonald's, not moving a whole lot. So this morning, I think we were down 2.5%, which seems to be a huge move for Pfizer. And that's where the 42 strike price popped up with the possibility expiring on Friday. And that's a trade that I took. So I said, yep, let's do this. So I'm adding Pfizer to my watch list here.
Yeah, nice opportunity there. Marcus, for the record, I was also looking at the trade, but it looked like the 4150, just a little bit of a lower strike, was available with a similar premium, and I was not able to capture that. So I'm watching it. We'll see if it's still available a little bit later today, but I'm not in that trade. Now, Pfizer, they reported earnings, better earnings per share than expected, slightly lower revenue. The reason why it was down today is because their guidance for the year is lower. They say that sales can fall as much as 33% in 2023 because of vaccines and also some other drugs like their Paxlovid. But again, some of this is already priced into the market. You see that it has, pulled back from the highs that were established in December. So even though sales could fall 33% in 2023, there's already a lot priced in, and that's why right now Pfizer's basically flat for the day rather than down 10%.
Right, and we'll see. It's still all over the place. So I sold these puts right here when I saw that were bouncing a little bit back, because I don't like to sell puts when we have a falling knife situation here. So I wanted to see a little bit of a bounce. Some of our mastermind members with whom we traded this morning got actually 30 cents on this one, because they said, okay, as this was heading lower, I'm going to take the plunge. I was a little bit more conservative here, waiting for a bounce back. And I mean, the day's not over, so you might or might not get filled on your 4150. If you're not getting filled on the 4150, are you considering the 42?
No, because I think that the ship has sailed if that's the case. I mean, right now the 4150's 6 bid 7 offer, and I was hoping to get 20 cents. The high of the day I think was 25. So I think I'll hold off and see if there's any opportunities tomorrow with some Fed volatility.
All right. But by the way, is this helpful when we're showing you what trades we're taking and why we are taking them? If it is, give us a like, and then we know that we do more about this. By the way, would you like to see another trade that we took this morning? If so, you know the drill. Click on like. Easy enough. All right, so here's another one, and this is one that actually popped up on the scanner yesterday, and you and I talked about it yesterday because we had Johnson and Johnson having a massive drop yesterday. Again, for Johnson and Johnson being down 3.7%. I mean, if you think about stocks like Tesla, that's nothing. I mean, if Tesla is moving 3.7%, you would say, oh, that's another day in paradise here. But for Johnson and Johnson, this was a big move, and it is because there are some news about Johnson and Johnson that the U.S. court dismisses a bankruptcy petition by Johnson and Johnson for its talc unit. Anyhow, just looking at the fundamentals, for me, Johnson and Johnson trading in a nice range. Looking at the fundamentals here, we see that okay, nice quarterly profits, nice annually profits and revenue. And also looking at the fundamentals data, $440 billion market cap, a 2.7% dividend yield, 25 PE ratio, all of this checks our boxes. So that doesn't look bad at all, right?
No, fundamentally and chart wise, it's great looking chart, great fundamentals. This is one where I made a conscious decision to pass on this. So we saw things just a little bit differently. Like the Pfizer opportunity, J&J. The lawsuit stuff. You could argue that they know what they're doing. I mean, they were trying to basically protect themselves from litigation and a lawsuit, and they already, I would imagine, have written off some money for that reason. So unless there was a huge surprise, a lot of that is priced in or expected. But still a little uncertainty there. And for me, the real thing was that you couldn't really go too low here. There wasn't a whole lot of protection to the downside. You're at about 1% away from the put, which, all things considered, the stock doesn't move a whole lot. So that's why you're not able to sell puts 5-10% below the current market, because this thing doesn't move a whole lot. But because of that, I decided, I'm going to sit this one out and see what happens tomorrow.
Yeah. So I like this trade. I took the trade, and I actually got here are for Pfizer, I got 25 cents. For Johnson and Johnson, I got 95 cents. And right now, if we see, okay, where are we trading for the 160? So we're 79 cents over 82 cents bid ask. So I'm up a little bit here.
Yeah.
We will see how this works out. Both of them are expiring at the end of the week. So both are very short-term trades. 3 days to expiration, not counting today. So Wednesday, Thursday, Friday. And that's where I had a nice 53% annualized for Johnson & Johnson and 54% annualized for Pfizer.
Nice trades.
All right. So right now I'm in 4 positions, and I still have one available because who knows what happens tomorrow after the Fed is reporting what they are doing, and also Powell saying what they think they're doing. But I'm very happy with where we are right now. So CTRA, our little CTRA, up a little bit today. So we're up 1.2%. Maybe if we move a little bit more, we might be able to sell calls against our existing position. Also, Google here, a nice move today, up 0.8%. Moving towards the 100 level again. You have sold calls against your existing position at 104, expiring this week. So also another 3.5 days to expiration here.
Yeah, and in addition to those stocks and the Fed tomorrow, it still is a busy week for earnings. AMD reporting after the bell today, so looking forward to see what happens there. Tomorrow we have Meta reporting. On Thursday we have Alphabet, Amazon, and Apple. So a lot of big companies reporting.
Yeah, so the next couple of days will be super interesting with all the earnings report and the Fed. I'm very happy in how I'm positioned. I like to have up to 5 positions in my portfolio. Right now, I have 4 because I did get out of NVIDIA. When was it? Last week? I do believe last week I got called away, or the week before. Can't remember, earlier in January. So I still have 1 position open to see what happens here over the next few days if there are some opportunities to pick it up. All right. Cool. Hey, by the way, hope that you found this helpful. If you did, give us a like and also check out some of the other videos that we have for you. If you're new to the channel, make sure that to subscribe. This way, we're popping up whenever we come back, and we'll be back tomorrow morning.
Happy trading, everybody.